So Latasha, why don't you introduce yourself, then I'll introduce myself, and we can start talking about pay.
My pleasure. Good afternoon, everyone. I'm just dealing with a little bit of voice issues, but I'm pretty sure I can make it through today's Q&A. I am Latasha DeVos, and I am outside of Philadelphia. I am a senior consultant with Civitas Strategies Early Start and have been with the company for over a year now. We've been working on so many exciting projects, many centered around business coaching supports for childcare providers in the state of Texas, Virginia, Indiana, and now Wisconsin, and probably some others that I'm not saying. But it's been a great experience. I've had a wonderful time working directly with providers on some of their business topics, but also training business coaches who are working with providers in those areas. And to date, we've trained over 50 business coaches who are out working with providers. So I'm just grateful to be here today, and thank you all for joining us.
And I'm Gary Romano, President and CEO of Civitas Strategies Early Start. Glad to be here as well. I've been doing work in childcare going back to 2005, before we even had the firm. And certainly over the past 2 years, as some of you know, we've been a lot more involved in the day-to-day work and helping childcare businesses get through the pandemic and flourish. And one of the ways that we've been doing that is, doing some direct work that's been funded by some foundations, but also primarily by states who have this money that's been set aside for childcare. And one of those things that we've talked a lot about, which is going to be the focus of today's call, but certainly, we're happy to answer other questions, is paying yourself. And we've been getting, so as you all know, we've been honored to take the reins of Tom's site and continue his legacy. And so we've been answering the many emails, texts, posts that we get every day as quickly as we can. And a lot of those have been around paying yourself and how do you do it. And I know in some of the states, like, for example, Texas, Virginia, Indiana, where we're engaged, there's very clear guidance on how you do that. Some of the other states have been less clear, and Tom has been clear as well in his past work. And so I think the first most important thing to know is that paying yourself is allowable, right? You may want to think about how you report it. You may want to think about how you do it, right? The methodology that you're using, but it's definitely allowable. And when we talk with providers that we're coaching in those states we're on the ground in, it's actually one of the things that we start with, because, and Donna, I promise I'm going to come to some of the questions that you have about other allowable expenses, but some of the things like what's a repair versus what isn't, and what fits as some of the structural things that come up versus what is not allowable, those tend to be more art than science. Unfortunately, it's hard to have a hard and fast list. Sometimes it's let's talk about it and let's understand better what is happening and the extent of it to determine if it's allowable. But pay is really clear, and if you do it right, it can be a great way to use those funds that you have, those stimulus funds, and do it in a way that you can then put it towards something that might be less clear, right? But that's your business, right? Once you get paid, you get paid. And I want to make it sound like this is like some sort of tricky loophole, right? This is something we've been talking about the states we work in. If you're in Texas, for example, you've seen actually the state say it in as many words that, whether you're a family care provider or center, payroll is the easiest, cleanest way to do this. And, I think with what of course I keep saying, the asterisk, that's part of it is, if you do it in the right way. And so if you're a W-2 employee, it can be fairly easy, right? Because you can get a payroll report. The vast majority of family care providers are not W-2 employees, and that's fine. You're a sole proprietor. So, your pay, as the government interprets it, is that line 31, that net profit all the way at the bottom of your Schedule C. So that's something that comes into play. And, as well as some other pieces along the way. But before I delve into some of the mechanics of it, Latasha, I'm trying to help you by saving your voice. So don't hesitate to, if I'm missing stuff, to chime in. So,
No, everything is great. Thank you.
okay. So if we talk about the, just the payroll piece of it, right? So how do you pay yourself as a sole proprietor? What we always recommend is, first and foremost, document, right? So if you happen to have a business account, that's great, right? As silly as it sounds, document a transfer, right? Like some bank accounts will let you document what the transfer was for. Write a check to yourself. Again, it may feel like it's a little silly, but if you're monitored at any point by your state, it gives you a record, right? It's not just, hey, I kind of did it on paper, so it's okay. But instead, you're actually showing documentation that you were doing it just as you would do if you had employees and you were doing W-2 payroll. So number one is document it in some way. And, again, if you don't have a business account, right, we always recommend it, but we also understand you may not. So find some other way that you can document it, even if it's like keeping a log that you keep up to date, right? Make sure there's something where you're saying, if I'm ever asked, I can show when I paid myself that I did on a regular basis. That could be monthly to keep your paperwork easy. It could be weekly because you want to be able to say the money's mine. That's okay. The second thing that we recommend is being cognizant of how much money that you're paying yourself. So if you take a step back from kind of the state perspective on these things, the money that's coming down is intended to keep childcare providers open and to pay childcare providers. And as a family care provider, many times you're it, right? You're the whole show, as you know. So you're included in this, but at the same time, the states are trying to be careful that they don't end up in a situation where we sometimes see with some of like the larger for-profit centers where they say, well, if I can pay myself, I own it. I didn't make as much last year on profit as I wanted, so I'm going to write myself a big fat profit check, right? So to limit that, what we always recommend is providing a constraint with it of, limit how much you're paying yourself to how much you took in for the month. So if, all the money that you took in for August is $5,000, then don't pay yourself more than $5,000 in a given month, right? Because again, if all things were equal, if they were normal, right, you likely wouldn't pay yourself more than you were taking in. So that provides a way of helping to show that you're not just kind of writing one big check for the whole stabilization grant and calling it a day. The last thing we recommend is think about your daily payroll or daily pay as defined by the federal government. So the US Treasury has provided guidance on other programs in the past where they've said if you're under a Schedule C, you're a sole proprietor, you can take that line 31 number, divide it by 260, right, which is the number of working days in a year, and that gets you a daily rate, right? And so that may be another way to limit how much you're doing at one moment and do it in a way that if you're ever asked, you're able to say, it wasn't just that I wrote a big fat check to myself, I was doing it in a similar way that I might pay any other employee. So why don't I pause there for a moment? Latasha, if you have anything to add, and certainly, we're keeping this very informal. So if you have questions, and I know there are some other questions around other allowable expenses, and we'll talk about those. But why don't we start first focusing on this one issue that I know has been a big one for people in paying yourself. So Latasha, if you have anything to add before we kind of open it up for questions on there. Excellent. Oh, you're on mute. See, now you're
I
really
think
muted.
it's great to open it up for questions.
Okay. And I will say that we're going to also, when we publish this, we're going to put in the comments some resources that we have that are free to use that can help you with all of the things we've been talking about. So if you didn't take notes or something, don't panic. So again, let's focusing on payroll first. Are there any questions specifically on paying yourself that you have?
I have a question.
Sure.
Okay, I wanted to know why is it, or not so much why is it, but what exactly is the wording that needs to be on your document that you, in the event that Okra asks you to do a desk review, what is the exact wording for I paid myself? I couldn't believe how they went back and forth with me on that until I got the wording exactly right. And it still was like strange to me, and I was uneasy about it. And this time around, I want it to be exactly right. Could you explain that, please?
Yeah, I mean, and I'm going to give you a great answer that's a non-answer, right? Unfortunately, there isn't a consistent policy. And this is one of the things that drives us all crazy, right? So the good news about all the billions, and we are talking about billions of dollars that have come down to the states from the federal government for childcare through the pandemic, it's wonderful that it's happening. On the downside of it, a lot of that money has come out very, very quickly. And many times there's been such a focus on getting the money out to the providers that there hasn't been as much clarity on, so how do you do it? What's in, what's out? And giving a definitive list. And of course, as you know, with a lot of times, whether it's the federal government or state governments, there's hesitation, right? Because if they're unclear, the federal government's unclear, you want to be careful on what you assume is right or wrong. So first and foremost, I would say if the state's given you guidance, it's always good to follow the state's guidance because they're going to be the first line of monitoring, right? So as awkward as their wording, what wording did they tell you, Donna? I'm curious.
Can you hear me?
Yeah.
Okay. They said, just right in there, wages, paying myself wages, something. It was really simple, but I think I put in there funds for childcare, and she said that wasn't correct because I guess it was more like saying it was going into the childcare and not to myself. So she said that's not what you want, and I just said, okay, what should I do? But it held
May
up.
I chime in?
Yeah.
Sure.
Yeah.
I'm in Ohio as well, and what I did with that paying myself part, I wrote a check to myself, and in the memo I just put hazard pay for this last round, and I think on the first pay, I used that as a retention bonus. You just want to make sure your dates don't overlap for the times that you're paying yourself. So with this last phase 3, then the expenses start July 1st. So you could write yourself a check and then in the memo just put hazard pay. And then maybe because we have July 1st of this year till I think June 30th of 2023. So if you want to just write yourself that check like that, just put those dates, after July 1st, that's how you're paying yourself hazard pay. And it was approved.
Thank you.
You're welcome.
Yeah, and just to build on that, and Destiny, thank you. I think that as you're indicating, right, whether, preferably in the memo field, especially if you're in one of the states where you're paying yourself, in kind of smaller increments of time, like on a weekly basis or, bi-weekly basis, I would put the time period it covers, right? So payroll, like as Steph is saying, operating costs, payroll is fine. Something indicating, just as you were saying, Donna, you don't want to just say like, my money now, right? Like you want to say something that's indicating the usage, that this is for pay, right? And as Destiny said, you might want to indicate the type of pay it is, but it can be pay. And then also when it's covering, right? So again, if you're paying yourself more frequently, if you're doing it for a quarter, right? Maybe it's January 1 through March 31st, 2022. So that there's a record showing when it covered as well. Then of course, as Destiny indicated, like, you don't want an overlap there at all.
Gary, if I could add just very
Yeah.
quick, in the
Please.
document guidance, when you applied for your money, you chose which area. So there were 3 different areas. One was technology, one was operating costs, and the other one, I can't think of what it was right now. But in order to pay yourself on that check memo, it has to say which area the grant originated from. Then you'll put out from that. So in this instance, it's going to be operating costs was the area of the grant. Then you're going to put payroll. And then like Destiny said, you need to put specific dates. And that's the way they will accept it.
And Steph, what state are you in?
Ohio.
Okay, good. Because I only say that because in the states it does vary, right? Like some states didn't have to necessarily have categories specifically ahead of time, and in some states where you did, it was only an estimate. But Steph is bringing up a broader point, not only for Ohio, but regardless, whatever state you're in, do keep in mind that when you report it, keep it consistent, right? We have had a couple of questions from where was it, Latasha? Was it New York recently, where we had a couple of questions about where they should put it in reporting, because it says something like, I think, wages and payroll or something along those lines. And that's the perfect place to put it. And I know sometimes we're a little bit hesitant because we say, well, it's not official W-2 pay for 100 employees. So is that okay? And it is, So do make sure that you're categorizing it correctly in terms of, or I should say consistently is a better way to do it. So you're putting it in the same place in the report. So if you are asked questions about it, you know exactly where it went. Other questions on pay in particular, and then we could certainly open up to some of the other questions that you may have.
One more question I have, and
Yeah.
can you hear me? That I want to know, is it wise to pay more than 50% to yourself as it relates to how you will be taxed?
So the taxation of it does become a problem, right? And honestly, the taxation with all of the stabilization funds can be pretty quirky, to say the least, right? So one, does it make sense to pay yourself and lose the taxes on it? I would say, certainly it does. If, and it's going to sound silly, but if you need the cash, absolutely, right? We've had providers, family care providers, where we've been doing this coaching in different states where they've said, I'm about ready to give up the money. In fact, I had one 2 weeks ago in Texas who said, I'm about to give up the money because I spent it on some toys. I did a couple of fixes in my house, and then I have nothing else to spend it on. And I was like, well, spend it on yourself, spend on your pay. And yes, it might get taxed more. And we have an example in the document that we'll put in the comments when we put this up on the site. But you'll see, like, mathematically, even if you go up, which is not necessarily a common occurrence, but let's say you even go up a tax bracket. Remember, the tax bracket only increases for those dollars above the bracket, right? So if you're at 22,000 and you move into the next tax bracket, the higher tax only applies to every dollar after the 22.
Okay.
So no matter what happens, you're ending up ahead, right? So number one is, I would always say, no matter how bad the tax hit is, if it's that or sending it back to the state, I would take the tax hit. That would be my recommendation, unless there's something extraordinary that you have, some extraordinary situation. The other thing I would think about is what we were describing earlier, which is you have a desperately needed expense that becomes trickier with the funding, right? Like, so for example, let's say your boiler's out, you need to replace your boiler. Well, you can prorate the cost using time space and say, 30% of it is attributable to the grant. In most cases, so therefore it'll pay for 30%, but you still have to pay for the other 70, right? And so it may be a case where you say, gosh, I'm going to pay myself, and again, maybe I'll take it on the taxes, but can't operate without that boiler being fixed or being replaced. So, I would say those are two cases where if you need the money, take it. All too many times I've heard providers who are saying, I'm trying to come up with a new expense for it. Yes, a new expense, right? You pay, $100 to get some new toys for the kids. Yeah, it's going to be an expense and it's going to offset that revenue. So when on your taxes, you're not going to be hit with it. And maybe that's a good investment of that money. But at the end of the day, you don't want to be making things up necessarily just to avoid some taxes, because even if you get a slightly bigger tax bill, in the end, you're still going to make more money when you pay yourself. Does that, I know it's kind of convoluted, Donna. Did that make sense?
So
Anyone else?
yeah, because
Yeah.
when you touched on time space percentage, which is another one of my questions. So wouldn't it be incumbent of us to try to increase that time space percentage? Because I have on my documents with ODJFS only when I first started out, and since COVID, I've opened up other spaces and did not get that remeasured as time space. And once I have and I'm getting an inspection real soon, if I get him to get my house, everything that I use now versus what I did 8 years ago, I can't believe that I let this slip through my hands this many years, where I didn't increase my time space as I went along, not necessarily knowing how important that is, because back then they weren't giving you grants or nothing. So now I realize that if you get a bigger percentage on that time space, then you get to, take a bigger percentage out of the grant money and use it, and you're right, legally. And it's nothing wrong with that. Does that make sense?
Yeah. So one, I would say I always recommend that your time space be reflective of what you're actually doing. Right.
Right.
And I say that because I'm hearing that you're doing that, Donna, but I say that for the broader audience. One of the things that our sister company we did some work in New Jersey with family care providers as well as centers. And we ended up getting permission to study 60 tax returns from actual providers. And without boring you with all the details, one of the things we found was that very often providers weren't using the time space at all. We've seen providers who are not reporting any business use of the home because they're afraid, or they're underreporting the time space because they're afraid, or they're using the standard business use of the home deduction because they're afraid. And so if nothing else, you should always be doing what's fair. I would never recommend that anyone should do anything illegal. Nobody on this call, anyone watching the recording, I know you don't want to either, right? But at the same time, you shouldn't pull punches, because that's not fair to you or your business. So one, absolutely agree with you, Donna. You should always be doing it fairly. The other thing I would say is, document if it's changed. The time space is typically used on your taxes. And so, end of year, you want that to match the tax year, right? When we do 2022 taxes, you want it to match the tax year. With some of the stabilization funds, of course, it's happening in real time. So you should feel free to, update that and document what it should be. And we have some tools on that we'll share as well for those of you who need it. But let me stop talking for 1 minute before we continue with more questions on it. Latasha, it looked like you had something you wanted to interject.
Oh, yes. So this is back on the paying yourself topic and taxes, because this has come up before where providers believe they'll be double taxed on the stabilization grant itself and then taxed on their pay. But that's not necessarily the case. When you receive the stabilization grant, all of that at that time is actually considered your pay in the eyes of the IRS, because you're self-employed. So any dollar of revenue that you get is your pay. Then to reduce your tax liability on that, of course, you look at all the business expenses that you have, including your time, space, and your business use of home, to offset that revenue to get your liability down. because at the end of your Schedule C, as Gary mentioned, that line 31, which is your net profit, that then transfers over to your individual tax return, and then that is taxed at your normal tax rate. But just don't be afraid that because you've chosen to pay yourself with the grant that you're being double taxed, because you're not. You're just being taxed at one time, and that's on the grant itself. If you told the IRS I paid myself $10,000, they wouldn't care. They would be like, what do you mean? Like, you actually received 30,000. That's how much you actually paid yourself because you're self-employed. But the stabilization grants, when they talk about paying yourself, it's because you're a staff person of a very valuable field, and they want to ensure that they are investing in the longevity of childcare, the well-being, the profession, all of that, and you are entitled to a pay. So the practice of actually putting funds aside so that you are able to consistently pay yourself is something that the stabilization grants are supporting, and it's something that they want sole proprietors to know that it is an allowable expense with their grant. So it's like two separate systems, basically. It's how the stabilization grant considers you paying yourself versus how the IRS sees you paying yourself.
Excellent. Thank you, Latasha. And again, like everyone, I'm not usually like chatting this much, but I'm trying to save Latasha's voice. So Latasha, don't ever hesitate to interrupt me because you always have great things to share. I think kind of coming back to some of the questions in the chat, and Donna, we'll get to yours, but I almost think it makes sense to go backwards a little bit while we're on this conversation around time space and kind of start with what Steph had asked about with the usage. Right now, one of the interesting things about being a family care provider is you are the only business. The only business. It's not just one of or close to. It's the only business that has special rules around the business use of your home. Period. Full stop. And it's important to know that there's two types of spaces in your home when it comes to the space part of the time space, right? There's exclusive use and regular use. So for most of the business world, exclusive use is all you're allowed, right? So, our entire company is a virtual company. We all work from home, right? So the area I'm in right now is my office and has been for many years. And this is, do the kids occasionally wander in? They do. And it's not like I can put an electric fence up or something. It would probably lead to other problems. But, but they know in general, this space is a work area, right? And if the IRS were ever to come in and audit me, they would see that it looks exclusive, it feels exclusive. So providers have exclusive space, and it's important to remember that. So that storage area that you have that's dedicated to your materials, exclusive. There's a family care provider I was talking with in Texas a few weeks ago. She has I want to make it sound like it's a dungeon or something. She has a basement. It opens up. It's one of those things where it opens up into the backyard. So kind of like a split level. And the basement is exclusively used for the childcare, right? So even though it's a larger area, that would be exclusive use. And the percentage that you're getting of that space is different than the other part of it, which is regular use, which you're also allowed. And regular use is really interesting because regular use, by the definition of the federal government, is fairly open. And what I mean by that is, basically say it's regularly being used, right? So one of the examples they provide, which is a great example, is let's say you have 3 bedrooms and your living room, and most of the time the kids are sleeping in the living room during nap time. But let's say you have a kid once a week, or maybe once every other week, who's with you, and he can't sleep with the other kids. We've all been there. I've had that kid. And so you put them in one of the bedrooms that normally the kids are never in. Well, then that would count as regular use, because you can say, that this is happening on a regular basis, right? So, so what happens is the space part of the time, space can open up in a very different way than it can for most home-based businesses. So Steph, to your point, what I found is when you talk to a provider, and one of the things we do in the states we're working in, so by the way, if you're in Indiana, Virginia, or Texas, the state's paying us to provide free coaching. So there's things that we can do for you through those systems, and we'll put some links in on how you register for that if you want it. But one of the things that we do in Texas is tax education. So we actually go through your taxes with you and provide suggestions on how you can improve things for yourself and reduce your risks. And one of the things we often see is that, again, providers underreport. And when you talk to them and you say, wow, you're really only using 50% of your home? They say, well, the kids use, like I had one provider who said, well, I use the living room once a week for a little STEM class that I do. That's regular use. Bam, right? Now that's incorporated. So what we find is what's often reported is a much smaller portion of the home than what's real. And what tends to be more real is what Steph is describing, which is it can be 100% of the space. If the kids are regularly using 100% of the space, that's okay. I think the most common scenario when you talk to providers is either that, where it's 100% of the space, or two, it's 100% of the space except for my bedroom, which again is understandable, right? But there's usually few limitations on the space. And I know some of the states differ, right? Because some states do have different regulations around egresses, exits in the home. And, so, I was talking with a provider who came to us through Tom's site, where they're in a state where really she's limited to one floor. And that happens, and that's okay, right? But at the same time, do know if it's legally allowable and you're regularly using these other parts of your home, they are fair game to be included in that equation. And let me pause there for a minute. And Donna, I did promise I'm going to answer your question I'm going to, but I wanted to make sure while we're on time space that we really got that. And Steph, you're saying the reason I asked my accountant prior to last year told me that the IRS will frown. So, so here's the issue. There's two issues, right? One is there's, and this is not an ageism thing, because certainly I'd be of the age to be in this category. But, throughout, I would say through the 90s and even the early 2000s, the home deduction was something that the IRS did look carefully at. Since that time, as we've gotten into, kind of 2010 and beyond, it's become very, very commonplace. And it's not the issue it was. In fact, remember, one of the things you have to put up there is your profession. It goes on your taxes every time, your Schedule C. So they do have the code, and they know you're not an insurance company claiming that you're using 100% of your home, but rather you're a family care provider. And by the way, when your accountant or tax preparer does the form for the business use of your home, there's a part of it that they can only fill out if you're a family care provider. So the IRS knows that you're a family care provider. And what we're describing is all within their limits when it comes to their audit guide, right? So again, Steph, like that's something, and I hope I don't sound like I'm not being negative to you. It just always gets me very passionate because I think about all the poor providers who are pulling those punches, like we talked about, because they're afraid. So number one is that's unfortunately old information. I know that's hard with your tax preparer, but I do have a solution coming, I swear. Two is, most tax preparers are not familiar with the specific rules around family care. Period, full stop. And it's understandable. I don't want to say like bad accountants. The reality is that if you think about your average tax preparer or accountant, chances are family care providers are a small percentage of what they do every day. And that's okay. So they may not know those rules. So one of the things I would suggest is there's some pieces that we can share. So as Latasha is, there's a number of guides that we have in other states. These are all free to use. And they're applicable to all 50 states of the union, right? So if you're in Alaska, you could use this too, even though it says Texas or Virginia or Indiana. You know, one is share some of the information with them. Another one that we did was for homegrown childcare, which is a national agency that just focuses on advancing family childcare. And we do a tax guide for them, or have every year. That has it in there as well. Share the information with them. And we can also pop in there the link for the IRS audit guide. It's not the greatest reading, but these are things that you can share. And don't hesitate. Don't blame Latasha, because she's already having no problems with her voice. Blame me. You could always say, like, there's this pointy-headed guy from Massachusetts who told me that I should be sharing this with you. And you should really read it. And do that. Because again, a lot of times, you know, I had this with an accountant in another state who, well-intentioned guy, very well-intentioned guy, he just didn't know. And when the family care provider was telling him these things, he was like, well, this sounds crazy. Because it does sound kind of crazy if you're not used to it. But once I was able to get on the phone with him, he was like, oh, I see how this works. Okay, yeah, no problem. We can do this. And I see why it's going to save her some money. And Latasha, I don't know if you want to jump in again. I'm sorry. I don't want to hurt your voice, but I don't want to cut you off either. Okay.
No.
So, you know, and again, don't hesitate if there's other questions on the space or the time part of it, but I also promised Donna I would get back to her questions as well. So Donna, you're hitting like the crux of like when we handle questions around, you know, spending these stabilization dollars. I would say like there's the two most common pools of questions are, how do I pay myself? Second to that is this a home repair or is it not? Like, is this allowable, this work in my home? So, you know, and again, you know, your state may give you other guidance. The guidance that we use, which is the same guidance that Tom gave and most of the major organizations give, is that, you know, one, follow the tax rules when it comes to what a repair is. And this is not a quiz. I'm not going to say, and everyone knows what they are, right? What they look for is a repair is typically something where you are replacing what already exists with a similar material and has a similar functionality, right? So for example, and these are real life scenarios we've had with providers, and I get it, right? Like, I'm not trying to be like mean about it, right? But like we had one provider who said, I want to redo parts of my kitchen. Okay. I want to take off my old counters, which were from mica, and I'm going to put down like some really nice granite, like really expensive granite. It's like, well, when you say about like, does that meet the same materials and functionality, that becomes a stretch, right? So what I would say is, number one, think about those rules. Number two, just as we were talking about, and I swear, Donna, there was a reason why I delayed, and this was why, was because Steph's question related to areas is exclusive versus regular use comes into play. Remember, exclusive use, you know, is either fully deductible or, and we can go into a whole thing on depreciation, but you can get full depreciation for that area, right? So for example, if you're having a painter in your home, as you described, you know, repaint, I would ask the painter, and by the way, don't be shy about this. Painters are happy for the money. You know, I've done this personally as a person who's had a home office for 13 years going. I've done this many times, anytime we've had anything done to the house that covers exclusive use areas and common use areas, is I've always said, can you break up the bill for me? And they're happy to do it. And so you can always have them break up the bill and say, look, that room, and that room are exclusive use. Can you give me one bill for those and then one bill for the rest of the house? So the first bill would be fully deductible and fully attributable to the stimulus, going to your question, right? Because painting, re-wallpapering, right? Those fall into that repair category. Chances are redoing those gutters, unless you're coming up with some sort of space age system. You know, I've been looking at my gutters and I get like very excited about some of the options. But you know, if you're doing something very similar, those are repairs, those are covered by the statute, so they'd be covered by the stimulus funds, stabilization funds. And I would think about what's exclusive use versus what isn't, especially if the wallpaper and the paint, because that wallpapering of the exclusive use area or painting of it, you can attribute 100% of that. The areas that are shared areas, yes, you have to get out your time space percentage, but going back to what was said earlier, you know, the more that you can utilize that time space calculation to your benefit, the better off you are. So Donna, does that answer your questions? And I know that might open up some other questions for other people. Natasha, again, don't hesitate if your voice and will allows to chime in, but let me stop
Okay,
talking for a second.
okay, so I
Yeah.
will just simply regurgitate it back. And this is what I got out of what you just said is wallpaper being replaced with paint. The fact of the matter is when the home was built, they put drywalls here. The home was built, drywalls here. Put a cover on the wall. We chose to put wallpaper on the wall for the very first time. It's still there and it's peeling up and it's not good with a daycare because kids get to pulling on it and that's very unsafe.
I had those kids.
Unsafe.
Yeah.
Yeah. Yeah, they'll peel it down till they can remove it for me, but I don't let them. So that's being replaced with paint. I don't see a problem. That's a
No, I would
strictly-
give that a full thumbs up, right? I'm
How-
not hearing anything.
However, if
Yeah.
I told you I was taking that wallpaper down and wanting to put some, say, tile all around there, like you said, exclusive tile, that's a stretch.
Exactly. Like
So
if you
I
if you
kind
say
of
to
got the
me,
comparison.
yeah,
Yes.
yeah, like if you're going to start putting up like the actual 24 karat gold foil, you know, paper or
Oh,
something
I
like
didn't
that.
think.
Yeah, I would say, I don't even know if there
Yeah.
is such a thing.
Yeah.
You know, that's where I would say, like, think about it, right? But, you know, if you're going from like painting to wallpaper, the use is similar. It's a wall covering. You
Yeah.
know, I'm not hearing you say anything that's super special, you know,
Right.
in terms, no offense, I'm sure you can pick out some great colors. And by the way, my wife would be happy to help because she loves looking at different wall colors, I found. But you know, but I'm not hearing about a huge difference. But always make sure you think it through, because one of the things we've heard as we've done this coaching is that sometimes when you ask the questions, you find out like, yes, I'm going to repaint the wall after I knock it down. Well, that's structural. Like,
Exactly.
that's a bit different, you know.
And the other thing was with the gutter. The gutter's falling off the house, and and everybody know that a house will not stand with bad gutters because
Yeah.
it deteriorates the foundation. So gutters getting fixed around the house, so I can preserve this particular area that I'm doing childcare in. And they look around the perimeter of your house, the exterior of your house when they inspect you, and all these things supposed to be in place. So to get the gutters repaired and filtered off from leaves and debris and what have you, that's a no-brainer to me. But it doesn't necessarily, I know they can't fit in every dynamic that we can use, but they get real close. And you know, before you ask for these funds, I think you would really want to know what is going to be a go and what is not. I mean, it would be wise to get as close to knowing it than not, and then have to give it back to them. Or, you know, I think the smoothest transaction is to get as much info as you can. And then I haven't applied yet. So I really wanted to sit in on this, and I thought you was Tom Copeland, but I immediately saw that you were not. But I really appreciate your time that you're spending with us. And I want to know one more thing. How quick will we get that information that you said you were going to give us, the documents?
So the actually Latasha's been putting the links in the chat right as we've been talking. And we plan to post the video of this tomorrow, and then we can put them again in the blog and on the Facebook page.
Oh, okay.
And you know, again, you know, we are, you know, as smart as Latasha is and whatever I am, yes, I mean, we're not quite the same as Tom Copeland, but we are glad to be here and continuing his legacy. And just as he did, you can email us, you can text us, ask those questions. as Donna said, it's much better to go into it knowing what you can do. So look, most states are not being draconian about this. They don't want the money back, right? It's much harder for them to get the money back. At the same time, they also can't let you misappropriate it, right?
Right.
So if you have questions, ask them. We're very lucky in that some of the states that we're in, or the states that we're working in, have been paying for this kind of one-on-one help with providers to help them figure out what they can spend on. Not every state is doing that, and we get it. And just as Tom did, just know you can text us, you can email us. I believe the phone number on the website is actually my personal phone number. So not like, it's not like one of my kids are going to pick up. I mean, my work number. So if it's a bad time, I promise you, I will not answer it. But we are happy to answer those questions, because we don't want you to go into this unsure. You lose enough sleep over the work you do. You don't need to lose sleep over this money that's supposed to be helping you.
And one more thing, the backup
Yeah.
generator. It's a company out there that's calling that says they work with the stabilization grant. And this came to my email, and it was really the first time I had a third party person trying to, I mean, you could say that of yourself as well, because you would be Tom Copeland, third party, trying to help us disseminate what's going on through this grant. Well, this person took it a step further. They're an electrician company, and they said that they work with people that's real big corporations, I think, that's receiving it, and that they were doing things like say schools with the security system, alarms, fire alarms, and things like this. Even with the shooting alerts and backup generator, everything in the house go out. I've had that happen. The whole house lost electricity, and they have backup generators that they're selling. What you think about that?
I mean, I think look, there's a whole lot of hustling that's going on, and it's troubling. We've seen people hustle with, I will help you apply for the grant, right? And most of the time, I don't know Ohio personally, so don't beat on me if this is totally wrong. But most of the state applications I've seen are not awful, right? Like in Texas, you're just confirming your data more than anything. In fact, we've had a couple of providers who, when they first did it, said, not sure if I did the application, didn't ask me anything. Like, just asked me to make sure like I'm at the same address and everything else. And it is shameful, I think, that some people are charging providers for that, because you may get nervous or anxious about it, and then you're losing out some of the money that you should be putting to your business and to yourself and to your family to keep going for the sake of the economy. In terms of some of these other things, what I would say is, we live in a free market. I know people are going to advertise. Always do your research, right? Because just because they're the one at hand doesn't mean they're the best option. And the other thing I would think about is they're not thinking about the time space. And, if you're checked and you do have something that's a common area improvement, you do want to say that you use time space on it, right? And, be able to say, this was the business portions, this is what I put the grant money to, versus this other part that isn't, right? If you have a refrigerator that you're replacing and it's your shared personal one, then yeah, you do want to apply time space. And a lot of times these folks who are sending these messages out, of course, are leaving that part out, right? Because they're like saying, get a free fridge. Government's paying for it, right? You can just use your check for a free fridge. But when it comes tax time, you are going to have to pay taxes on that other portion. If you get monitored, they're going to want to say, well, wait a minute, what about this other part of it? You used our money for that? So, I would say, look at those offers very carefully. Think about them as any other purchase, right? Do you really need the purchase? Is this the best vendor? And then also think about it in terms of, do I need to apply time space? And even though they're giving me a deal, can I really use all the grant monies for this, or is it going to be something where I need to think about the bigger picture?
And I thought when they left out, I don't know if they did it strategically, but they did leave out the simple word appliances. So there is not, if that word covers a multitude, washer, dryer, refrigerator, all of that. And I just felt like those weren't applicable because it could have easily said that. It says a sink, the sink for the kids to wash their hands, but it doesn't say a wash machine for you to wash the clothes that you wash on a daily basis for COVID and all of this and that and the third. But again, that's why I wanted to listen in to see some of these gray areas that, it's like have you pulling your hair out and wonder. And this is why.
And what I would say is, you want to use the same rules that the IRS uses, right, with any business deduction, which is that, is it necessary and ordinary? That's what they always ask you. Is it necessary and ordinary? And I say that because, to your point, Donna, if we were having a call in Texas and I was coaching you on it, I would say yes to the washer dryer, because if you are doing materials related to the business, it's necessary, right? You need to keep them clean, right?
Yeah.
You need to keep these things done. Is it ordinary? My guess is you are not the only family care provider in the great United States who is doing that, right? So, definitely think about, are these necessary? Are they ordinary? And if they are, and again, they're within some of those other parameters, right? So if you think about appliances, that is a wide aperture. And there's a lot of things that we use in our business that may also be personal use, but would fall into that category. So definitely think through what some of those options are. And again, don't hesitate to reach out to us on those questions either. I'm always happy to answer them. Latasha is, Leanne, Shantae, Kelly, like there's a whole group of us, who are on the team who are answering those questions. So, it's not like I don't want to make it sound like you're going to be like putting me out. There's a lot of people who are doing it.
Oh, I appreciate it.
Yeah, we're glad to do it. Other questions? I know we're coming towards the end of the hour. Any other questions? Washer dryer is covered. That's right. Ohio reconciliation is very easy. That's great
I
to
had a
hear.
question.
Yeah.
I'm not sure if you I missed the beginning part trying to log in, but as
Sure.
far as paying ourselves, like I have the business account, I have my own personal account. I don't know if should it be just like like once a week I transfer money for myself, or bi-weekly or whatever. I just like, if I need something, then I transfer from my business to my personal. But should it be like more organized, I guess, to prove that it's an actual payment to myself?
I mean, I would recommend that, and again, like we don't want to kill you with paperwork, right?
Mhm.
But the more that you can document it, the more strictly you can document it, I think the better off you're going to be, just in case there's any questions. And I don't want anyone to panic. Again, most of the states I know of, certainly the ones we're working in, the attitude on monitoring is they don't want you to have to return the money. They certainly don't want you to use it illegally, but most of the time in the states I know of, and certainly in the states we're in, the attitude is, we'll help you find something else if we need to, right? But if you're monitored, you just want to get it done with. And so what I would say is the more that you can document it efficiently and effectively, the better. So if you do have those two accounts, it may feel silly, it may feel hard, write a check to yourself. And in the memo say, this is my August payroll to me, right? That's okay.
Okay.
If you don't, you just have that one account. I've had providers who have written a personal check to themselves and just they've deposited it with the app, right? So that it gets in there and it's just, there's a snapshot that Bank of America or Chase or whoever has that you paid yourself in this way. The money went nowhere, right? The money just like flipped around in the bank account for a few minutes, but now she has a record. Or, even just keeping, it doesn't have to be a big fancy spreadsheet, but even if it's just pen and paper, record, I paid myself this amount on this day, and it covers these pay periods. So have some sort of documentation. Where I get nervous and, we are, in some cases engaged on the monitoring side of things, in the states we're working in, I get nervous when it's just, I wrote a big check to myself. Because
Okay.
then it's hard to know, like we were talking about earlier, what was that for? Was that really matching the intent of the grant? And so anyway, so long-winded answer to a very short question, which is document, like you don't have to go insane about it, but document as much as you can.
Okay.
Excellent. Well, it's been,
One,
no,
one
go
more
ahead,
que-
Donnie.
one
Do you have
more,
another
que-
question?
one
Yeah,
more
yeah, throw
question,
it
one
in.
more from Donna. Listen, if
Yeah.
you could please tell me, and I appreciate whomever the person that said the PPP wash and dryer is under there. That's the kind of info I'm needing, because things are hidden under different titles, and I will research that, and I really appreciate that. My other question is, as much as we use our telephones to run a daycare, all of the pictures and documents we take for teaching strategies, blah, 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 and everything else, where is that on, where can I cover that under here? I don't see telephone bill, but I was reading something. I thought I saw sale, and it does make sense if I was sitting here talking to an IRS person. But I'm just saying, simply the stabilization grant, why isn't that clear on there?
That's in, Donna,
go
that's
ahead. Go ahead,
in the first category. That
Okay.
fell under the utilities portion, the ongoing business costs or something like that. That fell under the utilities portion. That's how I got mine approved. So I printed out my cell phone statement for that month. And then I also had to print out when I paid it, like to show like the debit card or however I paid it, the date I paid it. And then I wrote on there ongoing costs, and that was approved like that.
Yes, it
Yes,
is.
your cell phone counts. Yep.
Thank you.
Your cell phone, your internet, your
Yeah, because
utilities,
my
all of
telephones
it.
are mixed in with the internet, and my
Yep.
goodness,
That when you
to
pay
run your
that,
technology, you need all of that. So
yeah,
it should have
yeah.
been made much clearer than that. But I'm gonna go back to that. But you said in the first section.
That's
Okay.
in the ongoing costs, and it's all, you make sure you print your statement, you make sure you print your payment confirmation. You need both of those documents, and then you're gonna write on there ongoing cost.
Yeah. Thank you
And
so much. It's all
You're welcome.
paid through the bank. I
thank
got
you,
it.
Destiny.
Thank you,
No
Destiny.
problem.
Yeah,
I just went
yeah.
through it, and I had some back and forth myself. So I'm like, well, I don't know, but yeah, they want the statement for that month. They want the proof of payment for that statement, and then you write the category.
Thank you so
And-
much for sharing.
And this is, such an important thing to keep in mind. If you're in other states, right, these rules still apply to you. And just as Donna was saying, it may be hard to figure out where it should be. Ask. Because
Yeah.
especially things like your phone, as you're pointing out, Donna, you need it, right? Destiny,
Yeah.
as you said, like the
Hey, run this
internet.
without it. I'm calling them parents every 5 minutes.
I know. Well, I mean, any
You
parent
know.
of a young child, that
Yeah.
number, right? Because it's
Yes.
critical, right? Something happens, God forbid, and plus you need to keep up with licensing and others, right? It's not for fun. And so, there's a work purpose to it. So definitely keep those things in mind. As I mentioned, don't hesitate to reach out to us. We're hoping to do more conversations like this. I know there were some concerns about the timing, and we're happy to rotate it. We always find providers, whatever state we're in, there's always different options. And so we'll definitely consider those as well as other time zones. Thank you all for being on today.
So will we get that information to our email? I saw that the Miss DeVos, she stuck it in the chat. She stuck it in the chat, some links. But will
We're
we
gonna
also
have-
get?
We don't have your email specifically, but we're going to put it on the blog as well as the Facebook tomorrow.
You don't have my email?
No, I don't think we do.
Oh,
Do
well,
we?
you about to get it right now.
Okay.
Your name
Well-
is Romano, and here is Zadana coming right at you. Please give me the info. I appreciate it.
Well, so everyone has it. We'll also have it up on the blog and on the Facebook page. Excellent. Thank you all. You take care.
Thank you. You too.
Have a great day, everyone.
Okay.
Thank you.
Take care.
Thanks.
Bye-bye.
Bye.